This Week in Startups is brought to you by Walker Corporate Law, a boutique law firm specializing in the representation of entrepreneurs. Visit them at walkercorporatelaw.com. And Invision. Find out why so many hot startups are using Invision to prototype, present, and collaborate on design in real time. Sign up for a 90-day free trial today at envisionapp.com/twist.
That's what it's all about, man. They said money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you. Yeah. Money is the root of all evil. What? Funny how it feeds my people. Yeah. We ain't gonna live like equals until we get the money, spend the money, and defeat you.
Hey everybody, welcome to This Week in Startups. I'm your host, Jason Calacanis. This is the show where we talk about technology startups and investing in them. And my guest today is Brock Pierce, and he does all of those things. He builds companies, he invests in companies, and listen, he's one of the brightest, smartest guys I know. I've known him for 2 decades, and I guess now the title everybody knows you by is the chairman of the board of the Bitcoin Foundation. Is that like now what people refer to you as opposed to child actor or founder of investor in 50 companies? What are they referring to you as mainly?
Well, typically if they don't know me, they'll start with the child acting thing because that's novel to most people outside of Los Angeles. Amongst friends, they'll normally jokingly say the Brock chain or Brock coin or something that obviously is just a play on my participation in the Bitcoin and blockchain ecosystem. But the main thing I'm doing today is I'm a venture capitalist running the first sector-focused fund investing in what we call blockchain technology companies, and we're so original we call the firm Blockchain Capital.
All right. Now, blockchain is a subset of the sort of Bitcoin cryptocurrency phenomenon. For people who don't understand this, because let's face it, like Bitcoin is a very new thing. It hasn't existed for, it's existed for less than 10 years, I think. And it's a little confusing. Why do you call the blockchain capital instead of just Bitcoin or cryptocurrency capital? Why is everybody now not talking about Bitcoin, but talking about the blockchain? What's the difference between the blockchain and Bitcoin, and why is that important?
Yeah, so the right way to think about it is the blockchain is the operating system or the protocol.
Okay.
And Bitcoin is the first application. So if we equated it to mobile, it's the first application on this new platform or operating system. I like to think of the internet we use today as the internet of information, this being the internet of value, and again, Bitcoin just being the first application built using this type of technology. And a lot of what you've seen lately in terms of financings are in companies that are using this technology stack or protocol to deliver the transfer of other assets. And so Bitcoin, I think, is an enormous opportunity, but it's best thought of as kind of like the tip of the iceberg. And the overall opportunity is much bigger when you look at other, again, applications of blockchain tech.
Okay, so a way to think about the blockchain is this is the underlying technology of Bitcoin and other cryptocurrencies. It's a public ledger of every transaction that is not stored in a single place, but it's replicated to all versions or all clients or servers that are involved in that network. Is that correct?
Yeah, in most cases. You have this whole debate around public and private blockchains, which we probably don't want to go that deep. But yeah, that's the right way to think of it. It's a distributed ledger, and instead of going from a centralized server or to even a cloud-type service, it's to a distributed and decentralized sort of architecture where it's running across so many computers hosted by a number of different individuals in a way that the service is very difficult to take offline, nearly impossible. And another interesting way to think about it and how Bitcoin sort of mining works, or what you think of, I refer to as, call it transaction processing, is imagine a Visa, MasterCard, or a bank said, I no longer want to host any infrastructure. I don't want to have any servers. And instead said to their customers that anyone can run our software and host our infrastructure. And in exchange for doing that, we'll give you a piece of the revenue relative to your contribution of computing power.
This sounds an awful lot like
crowdsourcing.
Yeah, it sounds an awful lot like the peer-to-peer revolution, which obviously Travis from Uber was doing Scour, other people were doing Nutella and Napster, where every client is also a server. So in the Bitcoin world, many people can have a copy of the blockchain, which is what pieces of currency moved where. So if I gave you a Bitcoin, you give me a Bitcoin, it's permanently on the record. and nobody can ever take it off the record. Is that right?
Yeah, you've created an immutable record, and that's, for example, one of the more recent deals we did with Tim Draper and his son Adam. This is a company that came out of Boost,
right?
A company called Stampery is exactly that. So I lump our investments into three different sort of categories: Bitcoin deals, blockchain deals, which are building enterprise software for financial institutions, and then kind of the third bucket would be alternative use cases. Stampery is focused on legal services. And for anyone that's ever used a notary, anytime someone's asked you to notarize a document, you're kind of like going, oh my God, I really have to go find one of these stores. Does FedEx or Kinko still do that? Or let me call and hire someone to come into my office. But what they do is allow you to drag and drop a file and create an immutable record in the blockchain so that you know it's been time stamped and it can't have been tampered with. And I now know that agreement was, permanently an immutable record of that has been created upon this time and date.
So if I sent you an investment document, a convertible note, I would put it into Stampery. Stampery would then, in a blockchain, put Jason sent the document called whatever, This Week in Startups investment.
And it's been hashed, and now there's a permanent record of it. And if there were ever litigation, I feel that any expert witness would say that this is a better proof than what I was likely to get from a notary that I paid $50 to.
Because the notary could have been paid off, could have forged it, could do anything.
Notaries are still a pretty reliable service, but again, in terms of just efficiency, cost,
they don't have to come
use,
see you.
Yeah.
That's the benefit.
And it costs nearly nothing.
Costs zero, basically.
And you can essentially now notarize everything. You can even integrate Stampery into your email client so that all of your emails have been, proofed in such a way that now, no one can ever send around an email and say that wasn't me. I guess you could do some of that with the PGP key, but I think it's a pretty interesting service, and that would be an alternative use case of this type of technology.
Okay, now is the blockchain collapsing because it's so large for Bitcoin? Because this is what I keep hearing from people is Bitcoin.
Well, that's the whole debate. The last 2 weeks have obviously been largely about this.
Something is going wrong with Bitcoin. There's been a huge debate. And there's also this issue of just how big. So let's just start with one issue. How big can the blockchain get before it breaks? And what does the blockchain do when it gets so large that it can't be kept in one place? Is that a problem or not?
Yeah, so the broader discussion would be how scalable is Bitcoin, in its current architecture and in the future, right? The debate lately has been one of the core developers, Mike Hearn, had put forward a proposal. The community debated it and eventually said, okay, you're not going to go with my proposal. Well, I'm going to take my toys and go home.
And what was his proposal?
His proposal was to create a thing called Bitcoin XT. Instead of the core client, a new client. And the community more or less didn't come to consensus. So the Bitcoin's blockchain is a democratic system where the transaction processors or miners have the code is dynamic, meaning it can be updated as long as a majority of the network agrees to update the software. And so he had put forward a proposal saying, I think Bitcoin has scalability problems in its current architecture.
Right.
Here is my solution to it. And the rest of the community didn't agree with him because they said, there's a dozen ways to solve for this problem.
Right.
We think that there are better ways to do it than what you've proposed. And he's walked off. And that's what all the debate has been around lately. And part of the problem you have is when you have a consensus-based system where it's democratic in nature and where the political process is public, meaning everyone gets to see how the sausage is made.
Right.
It's messy when you're watching this process. And when it's all said and done, I think we're going to look back and say, wow, this consensus forming methodology is great. It just creates a lot of public, everyone gets to see how the things that we eat are made, and most of the time, most of us wouldn't like to see that.
So exactly. So when you have an idea to change Bitcoin's code base, as a developer, anybody could propose that. So I could go in and say, I think Bitcoin, every time a transaction should occur, 1% should go to this charity. And
Correct.
Here's the new client I wrote, and everybody who wants to give 1% of transactions to charity, or let's make it even more ridiculous, 0.01% goes to poverty, for the UN's poverty fund. And if 50% of the people who own Bitcoins, or 25%?
So it's actually it's the miners that.
The miners.
Well, so it's, again, the system has actually got multiple layers. One, the developers or a developer has to write the code, put it forward, and it goes really through kind of a peer review type of process where it gets vetted because, again, it's a very public process.
Like an open source.
It's an open source project, exactly.
Like an open source
That's
project
what it is.
would.
And then the people that are running the infrastructure have to come to an agreement.
The miners.
The miners have to say yes, and then they need to run it, process a certain number of blocks, and you actually need more than 51%. You really need to call it 90. You need consensus. You need to get
of
those
miners.
miners. But then the miners are also influenced by then the other parties, which would be the companies, the Bitcoin exchanges, the wallets, the payment processors, because if what happens is you go through this process of a hard fork where you get two versions of the software running, which means now everyone's coins have been replicated into two wallets. And now whichever ones the payment processors say we're going to accept as real and we won't accept the other ones as fake, they start to have an influence. So what you end up with is a really distributed system.
It's almost like the government, like in the United States, where you have the executive branch.
Correct.
And then you have the legislature, I guess, like in the Congress or whatever. And
we didn't. I think even in my case, I've been surprised by the various constituents, the level of influence they ultimately have over this. And I think this is the first time we've really tested this as a community. And that's why you've seen a lot of this sort of publicity as of late. My view is that there are a lot of solutions to these problems, meaning there's many ways to scale Bitcoin. It's not a matter of if we can fix it, it's a matter of how we choose to fix it.
Okay.
And there's some very, very smart developers, I think some of the smartest engineers in the world that are focused on how do we do this? How do we do this the best way? And let's crawl before we walk and walk before we run. We're not in some particular rush, and any of these problems that Bitcoin is having as of late are due to its success. It's a scalability issue. It's called, wow, Facebook has gotten so big, we have to figure out how to expand.
Yeah, MySpace is crashing. Twitter's fell
These are called good problems to have.
High-class problems.
High-class problems.
When we get back from commercial break and our partner break, I want to ask you about this miner issue, because the majority of miners, according to people I talk to, and I'm not an expert like you, so I want your opinion, are in China now, which means if Bitcoin is then relying on the miners to make decisions, did we just give Bitcoin and control over Bitcoin over to the Chinese, which is not a democracy, when we get back on This Week in Startups. Hey everybody, let me stop for a moment this amazing episode and tell you about the Walker Corporate Law Group. Yes, they are a boutique law firm that specializes in the representation of entrepreneurs and startups. And Scott Walker is the founder of that company, and he is a personal friend of mine, and he does a great job working with startups. I have literally introduced him to dozens, maybe hundreds now, of startups, and they all rave about the services of the Walker Corporate Law Group because their lawyers have decades of experience. You're not going to get junior associates who are getting on-the-job training with your startup. No, they're going to help you with mergers and acquisitions, licensing, terms of service, privacy policies, formation, all this kind of stuff, fundraising, and they're really great at it. And they do fixed fees. They don't want to surprise people with crazy bills. They think that billable hours can reward inefficiency, so they'll just be fair with you. And that's what I love about them, because if you're a startup, you don't want to get that sticker shock and get a huge bill. Make sure you use the Walker Corporate Law Group, and you can do that by calling Scott Walker at 415-979-9998. 415-979-9998. You can email him, scott@walkercorporatelaw.com, or you can visit walkercorporatelaw.com as well. Scott@walkercorporatelaw.com, and let Scott Ed Walker on Twitter know, at Scott Ed Walker, know that you watch the program and you appreciate him supporting independent media like This Week in Startups. One of my oldest advertisers, one of my oldest friends in the industry, just a great guy, a total mensch, and he really takes care of the startups who work with him. Thank you, Scott Walker, for supporting This Week in Startups. Bye-bye. Okay, let's get back to this program. Come on. Welcome back to This Week in Startups. When I left our hero, Brock Pierce, who you can follow on the Twitter at Brock Pierce, I was asking you about the miners in China, because this is what I heard. So I need to get confirmation on a couple things, because sometimes my information is good, sometimes it's bad. All of the mining has moved to China because there are people putting Bitcoin miners, just really powerful computers, I guess with great GPUs, into state-owned electricity grids, let's say a nuclear power plant's basement, a hydroelectric dams, office space, or just somewhere where they can just tap off of state-run electricity. So they've removed the entire cost of mining, and then they have just killed all the Bitcoining that's not in places where you can't get free electricity. So to start, is that true? Is that what's happened to the mining community?
I'd say it's half true.
Half true.
I mean,
Okay,
there's a lot of truth to what you're saying. So I get asked this question all the time, which is, is there too much concentration amongst a small number of miners? Are those miners, primarily in China? What are the risks that this presents, to the ecosystem? And as someone that invests full time in the space, I need to know whether or not I should be concerned.
Yeah.
I'd say, this is something I obviously pay close attention to, and I've been in the mining aspect of the ecosystem for a long time. And so the variables that matter, one that you point out is your energy cost is a very important variable. If you wanted to run mining at any meaningful scale, you want your energy costs at least at 5 or 6 cents per kilowatt hour, ideally down in the 1 or 2 or 3 cent range. And if you can get it free, better yet. But if you're down in that sub 3 cent range, you have a...
Where can you get electricity at that rate? What do we pay for in California?
You probably up here it's 10 to 15 cents would be my guess. I don't know the local energy cost, but it's going to be in that range. There's only a few places in the world where you get very low cost of energy. Iceland with their geothermal. You've got Washington State, which is where we actually get a lot of our power from, which is hydro. You've got countries that subsidize it, whether it be Kuwait or Venezuela, countries with lots of energy.
So they have tons of oil. So
but I don't know if you want to be building a business in Venezuela right now. But yeah, you can get free energy there, and and Kuwait to some degree. I don't know where you hit scalability caps, but what China has is hydro, as well as they've got some coal, more, I guess, in Mongolia, or Inner Mongolia, which would be China, right? So in China, you've got a lot of these hydro dams. They offer 1 to 2 to maybe, they call it 2 to 4 megawatt facilities. Now, the problem you have in China is you're not allowed to buy energy from anyone except for the government. And so when these deals are being done, they're being done outside of the government, so they're probably in violation of law. And so there's some risks there about its long-term sustainability. Me, for one, I would not be comfortable investing in one of those operations because there's a bunch of risk factors there that I don't know how to quantify.
And you would like to go back to China in this lifetime. And by the way, if you steal from the Chinese government, that might not be advisable.
Yeah, so the question is, are they stealing? Are they circumventing? In some cases, are there backdoor deals? And obviously, these sorts of things do happen in that region. So there are those risks where long-term, I wonder how scalable it can get, because I don't believe I don't believe the Chinese government has decided this is a matter of national security and we're financing this. I believe this is a lot of backroom sort of dealing.
There are people who are
guys hustling.
There's guys hustling who are like, my cousin works in this hydro dam. Let's put some miners in the back room. Or I'm going to run an extension cable, as it were, to put some miners up.
And that so for that reason, I don't go, this is a long-term legitimate risk. And then if you look at the actual mining today, the largest Bitcoin mining company in the world is one where I happen to be an investor. It's a group called Bitfury. They're largely in the country of Georgia. They've got interesting government subsidies. Up in KNC Miner, I used to do all their selling into China, coincidentally, is largely based in Sweden, which is where Facebook has some of their large data centers. Iceland. I don't think that China has a monopoly. Obviously, they've got a lot of the mining activity occurring there.
Do we know the percentage of mining from each country and how it's changed over time?
Well, you can see somewhat because you can't see through the mining pool. So what happens are when the transaction rewards are being given out, whoever solves that block every roughly 10 minutes, they're winning that reward. So if I were going to be a small miner, I don't want to rely on the statistics of winning the lottery. So instead, we pool our money together. So we get a statistically, call it relevant payout. And so the mining pools maybe have some visibility in that, but we look at really the top 10. So you got the mining pools as well as the very large miners. And on that basis alone, China's up there, and they might even be approaching at certain times the 50% or even 51%. But the reality is you actually need more than that to affect any chain. And the thing that I rely on more than anything else is more than a contract, an alignment of incentives. How do the Chinese benefit, the miners that are investing all this money and hustling to make a buck, benefit by destroying Bitcoin?
Right.
So the most important thing I think that we have as an industry is everybody's interests are aligned that are currently investing in this. There might be someone that comes along and says, I want to incinerate $1 billion for the purposes of, rattling the cages of an industry and, causing people to, have doubts about its long-term viability. But that's not any of the people currently in the ecosystem today. So the alignment of interest, the fact that I don't think, this is a national security type bet, the fact that you see lots of growth all over the world, it's not one that keeps me up at night, though it's a legitimate issue.
Yeah. So the worst case scenario for Bitcoin right now, because this person who had their proposal denied, and in your opinion, took his ball and ran off. What was his name again?
Mike Hearn.
Mike Hearn.
He's obviously a very smart guy that has done a lot to
yeah.
contribute to Bitcoin. But he also just joined a company called R3, which is a consortium of banks. And so there's he's creating a competitive blockchain at this point. So that's another reason why someone might do that.
Right. So he's now moving on, doing a different one. So it could be a little bit of grandstanding, as it were.
Which, by the way, is a smart thing to do. We all do it in our business if we're in a position to do so, if it's going to benefit ourselves. I mean,
I have no idea what you're talking about, this grandstanding.
None of us are biased here.
So is Bitcoin going to find a killer app? Because this is the thing I found interesting. I mean, obviously, I wrote about Bitcoin like in 2011 when it was under $1. Like an idiot, I didn't buy any.
You were one of the first. I mean, I went back and I've looked up your emails twice, and I think sent them to you. I'm like, I'm really impressed how early you were talking about this.
I was just...
And communicating it.
Yeah. So, I read about it on, I think, Reddit was getting there were some people on Reddit, and there were some people on Hacker News talking about it. And I was like, wow, I wonder, and my mind wandered, like, what if this actually worked at scale and people invested in it? Like, geez, like the government wouldn't know where money was, and then what would it do to monetary policy if everybody takes their dollars and buys this? Or in a puppet government, everybody takes their money out of Brazil before it collapses. What happens? Then
the mental exercise is very entertaining, if nothing else.
Exactly. And I mean, just your mind just explodes with the possibilities. But what I've been shocked by is that there hasn't become an application for Bitcoin other than or at scale application, other than money transfer and speculation. In other words, buying Bitcoin on the speculation that it would rise and making money that way. Why hasn't it become part of our day-to-day lives? Because I think in 2012, 2013, 2014, we all thought we'd be taking out our phones and buying our coffee with Bitcoin. Is that ever going to happen?
Not so much here in the U.S. In the near term. And this is the thing that most people that have approached me over the years have said, I don't understand this Bitcoin thing. What do I need it for? I go, you don't. You're an American, and let me guess, you have a bank account.
Yeah.
Let me guess, you got a piece of plastic in your pocket that lets you conveniently pay for things.
Right.
We also have rule of law that's here to protect you in theory. You've got faith in the system, and of the 200 currencies in the world, we've got one that everyone wants more of. Right. It's not necessarily a product that's going to make you run out and hit the store, because for people to adopt a new technology or a product or whatever it might be, in mass in a short period of time, it normally needs to improve your life by an order of magnitude.
Sure.
And for most of us, it doesn't, unless you're a member of the 70 million on or underbanked here in America that are sending money back to Mexico or India, the Philippines.
And they love it.
And we're starting to see that. The traction that I'm seeing in Latin America right now, Africa, Southeast Asia, or places with strict currency control laws like China and Korea, you're starting to see, I just opened up a couple of presentations from portfolio companies today, and when you're seeing 1,000% growth rates, or 10,000% growth rates.
Year over year.
You're starting to get to exciting, and I'm seeing this kind of universally throughout those regions. And that's where the first real use case beyond speculation has taken hold, and that is cross-border transactions, because it is, in most instances, the fastest and the cheapest way to send money from this country to another. And that's because of a lack of interoperability in financial systems. Everybody, like we had 110 power and 220 and all these different plugs, the world's financial systems are very built similarly. Everyone has a different thing, and for that reason, between compliance and their technologies, the time and cost of moving money is very, very high when you leave your own nation.
All right, when we get back from this second break, I want to ask you about other countries allowing or not allowing Bitcoin, and what's the state of that? Because that was the other big question mark, would be, hey, if things hit scale, is China or Brazil or any of these countries that are in, I don't know if I could say the emerging market or the developing world, but the non-democratic West, what is their reaction to Bitcoin today, and what do you think it's going to be in the near future when we get back on This Week in Startups? Hey everybody, let me tell you a little bit about Invision app. I use Invision app all the time with my designer, my product manager, my growth team to share mock-ups of our products. We take those mock-ups and we design them and we send them to clients, to partners, to investors. And we say, here is an Invision link. Open this on your iPhone, on your Android phone, and you can click through and see what this product that we're making is like. And when we're building websites, hey, put your comments on there. We have a partner. We have a big Smart Camp thing going on with IBM, Smart Camp 2015. we can use Invision to share that website and say, hey, is there anything you want to change? And then have a threaded discussion. You can take all those discussions off of email, all those discussions out of the chat room. Listen, email and chat rooms have their place, but not in product design. Invision is like Slack, but for product design, right? So you have Slack for a general conversation. You have Gmail for, asynchronous communication. You have Invision for product excellence. You cannot make a great product without Invision. I am dead serious about that. Every startup I invest in, I show it to them. They ask them to send me links, and boy, does it work. It supercharges everything you do. I love this product. I love this product. I love this product. Get out of email, get out of chat rooms, and do what Twitter, Airbnb, Evernote, Adobe, and many more are doing. Prototype what you're doing in Invision. It just makes designers and teams and founders so much more efficient. Go to envisionapp.com/twist for 90 days free. That's their starter plan, free for 90 days, only at envisionapp.com/twist, envisionapp.com/twist. And everybody thank Invision App on Twitter. I thank them for making a great product and for supporting independent media like This Week in Startups. Let's get back to this amazing episode. Welcome back to This Week in Startups, everybody. I'm your host, Jason Calacanis. You can follow me on Twitter at Jason. You can follow me on Instagram at Jason. And I'm not going to mention any other services because I don't have my first name on them. That's basically it. If you want me to mention your service on air, you got to get me my first name. Special memo to Evan from Snapchat. I mean, do I have to suffer here as Jason Calacanis for much longer? Who's got Jason on that damn service? Give it to me. Same thing with Vine. I don't have Jason on Vine. I will not participate until I get Jason. That's my position. What's it going to take? All right, listen. Brock Pierce is the co-founder and managing partner at Blockchain Capital. They are blockchain.capital using that new TLD.capital. Very cool. First person I've had on the show using .capital. You can follow them, Blockchain Cap, on Twitter, and you can follow Brock Pierce at Brock Pierce. Okay, Brock, when we left, and this has been fascinating, you're catching me up a lot on what's happening with Bitcoin. Is it banned in China? Can you send money out of China using Bitcoin? Because it seems unclear to me what the rules in China are, and in which countries is it prohibited, and is it a soft ban? What's the state of regulation for Bitcoin globally?
Yeah, it's pretty much legal everywhere. Okay. And I mean, if anything, this is the thing that's probably surprised me the most. When I was getting into the business, and for the first 6+ months, one of the main things that had me concerned was how were the regulations going to fall out here. And I know in fashion, orange is the new black and all. I just never thought I'd look good in that color. So This one kept me up at night quite a bit as I was deciding, when do I start to make my activity in the space publicly known. Yeah. But that was my big concern, and I've been shocked. I mean, I could have never predicted, or I would have never predicted, that the sort of regulatory response to this technology was going to be as positive as it's been. And that is that it's pretty much accepted everywhere. And the question is there, are there existing financial regulations? And the answer generally is yes, that predate the internet. And we're beholden to most of those. And then, what regulators are looking at today more than anything is what are the bespoke sort of new regulations that we want to create or design to support, this new emerging technology. Now, what's happened in China, because there was a lot of press, was, is Bitcoin legal in China? I think what was happening, and again, I'm speculating, I can't speak for the Chinese government.
Well, I mean, I don't think anybody can really speak for the Chinese government because it seems like it's 12 governments. I mean, there is a process in China that seems to be provinces, sort of consensus builds over time, and then what the law is kind of a moving target, isn't it?
Yeah, China's... It may not have multiple political parties, but it has political factions within that party that probably look pretty similar to what we have here. And then you've got state sort of, interests because the regions are all a little bit autonomous, very similar to probably what we have here in some ways. But China, I think, likely saw that Bitcoin was growing rapidly. You don't want to stifle innovation, certainly not in this day and age. I mean, one of the biggest advantages that I think America has had as a nation is a lot of emerging and important technologies have, been invented here or have gotten to scale here.
Yeah, sure.
And American companies have been the big beneficiaries of that. So I don't think you want to be as a nation anytime a lot of smart venture capitalists and technology thought leaders say, hey, there's something here. You normally don't want to just close the door on it and say, we're not going to be a participant in this future.
Turning the internet off generally doesn't work out well.
No. So I think for that reason, they took a position where they said, Bitcoin is legal. You need to get a license, but banks are not allowed to work with you. And I think what that did more than anything is it just put the brakes on things.
Got it.
Where it took growth rates that were, up and to the right, where you need to be a rock climber to get up that, up that incline, to something that was manageable, where you had time to observe, study, and determine what your longer term policy is going to be.
Banks weren't allowed to
bank Bitcoin companies in China.
Bank.
So that created a lot of friction around transactions, which slowed growth. It didn't stop it.
So people can buy and sell Bitcoins on exchanges or not?
Yes, all of those companies exist. I'm an investor in what was called BTC China, which is now BTCC, and Bobby Lee, the founders and advisor of the firm, and also on the board of the Bitcoin Foundation with me. So China's a market we follow closely, huge trading volumes,
so
massive amount of activity.
You can't be a bank, or you can't work with a bank. What does it mean?
It's called banks are not allowed to get directly in the business. They basically said startups are allowed to do this, but we're not letting the big boys, the big financial institutions into this business in a way that they'll bring it to a scale that we're not prepared to handle yet.
Got it. So it means, yes, somebody can start something up, but they're going to reach
It's actually good for the entrepreneurs.
Great for the
They basically said the big companies have to stay out of this for the time being.
Yeah, no, GM and Ford and Mercedes cannot
make electric cars.
Yeah,
Elon Musk could be like, thank you.
Yeah, thank you. They just chose to not do that. They just chose to shoot themselves.
Which I think is a temporary thing. And I think, again, I don't know, but if my goal was to buy myself time to understand this technology, that's probably a pretty smart way to do it.
Sure it is.
Leave it to the startups in the interim.
They throttled it so that it can't hit everybody. So will Bitcoin be the primary cryptocurrency in the world in 20 or 30 years? Or do you think there's going to be another one that sort of builds off of what happened with Bitcoin? What are the chances it's Bitcoin? What are the chances, Bitcoins move into some new currency that solves some of the Bitcoin core problems? I mean, obviously you're chairman of the Bitcoin Foundation.
But I'm also an investor in all sorts of things. So.
Yes. So, I mean, Ripple was one that seemed to have promise, but I guess
we're an investor in Ripple.
But the owner of Ripple seemed to have all the Ripples. So they owned, him and Jed owned 40% of the Ripples or something that kind of put a kibosh on the currency.
Yeah, Ripple's still doing amazing things, and we're happy to be an investor. And Chris Larson, the founder, is, one of the examples of a proven fintech entrepreneur. The sort of CEO that, as an investor, that's coming into the space, you're very happy to see, and your first reaction is, I probably want to back this person.
But you haven't heard much about it.
They've been doing a lot behind the scenes with financial institutions. Ripple's been doing very well, and I expect they will continue to do so.
And what about Stellar, Jed's new thing?
Stellar is... So the big difference between the two is Ripple has taken more of an enterprise financial institution approach.
Yeah.
Stellar went more down the consumer path, because Ripple had those two sort of competing arms for a long time. Are we trying to become a Bitcoin competitor, or are we trying to build, consensus distributed ledger technology for big companies? And it appears, as again, I'm speaking as an individual, I'm not by any means speaking on behalf of the company. It appears that they've gone down the path of working with major financial institutions, and they've been getting a lot of traction in that department. And so I think the big question about Stellar is going to be that they're focused on how do you scale their consensus algorithms, and if they succeed in solving those things, I think it could be very interesting again. And I haven't caught up with Jed or Joyce in a while, so I don't know where they are. But they're trying to solve some very hard problems.
And they're giving the coins away for free, basically, to the emerging world, or some number of them.
I think sign up your Facebook account, things of that nature. I mean, a good sort of customer incentive, like most businesses are going to offer. Your first one's free. That's a model that's been working for a long time.
Okay, so you've invested in. I'm pulling up your portfolio.
But so to answer your question, is Bitcoin the Friendster, the MySpace, or the Facebook? All of these man-made businesses have failed normally because of because of people, and normally a handful of individuals. In the case of Friendster, it scaled too fast. VCs hadn't really ever dealt with that before and didn't know how to handle it, and the business more or less broke, I think, more because of that than anything else. MySpace got sold. Naturally, once big companies get sold, they tend to underperform because entrepreneurs slowly check out and start thinking about...
and it was built on bad technology, let's face it. The code was not super scalable at the time.
And hard to fix when you're that big and that early.
Yeah.
And especially once you've already cashed out. I mean, generally entrepreneurs, by 2 or 3 years into a gig, you're starting to think about what else is going on in the world. Been there, done that. I'm a little bored. But the thing that Bitcoin has that's different than everybody else is, like we talked about earlier, is the fact that the code can be changed. So if another cryptocurrency comes along that finds something, a really novel sort of innovation or fixes some problem that might exist in Bitcoin, Bitcoin theoretically can copy that as long as the community agrees to. And so because, again, you're dealing with financial technology, most of us are not going to be comfortable in putting our life savings or billions of dollars of value into an unproven technology. The thing that Bitcoin has going forward is that it's been around for 7-8 years, and that gives most of us some degree of assurance that it's going to be around in another 8 years. And so I think any new currency is going to struggle, but it's not certain. But my money's still on Bitcoin. But I do hedge. I bought Ethereum. Ethereum, I think, is extremely interesting. I tell most of the people buying Bitcoin today.
What is Ethereum?
So Ethereum is a new currency. Well, the currency is called Ether. They just passed up Ripple and Litecoin to be the second most valuable cryptocurrency. If you go, the site I use to track all the prices of cryptos is coinmarketcap.com. And so Ether is a Turing-complete coin that is designed to be more of a smart contract platform than it is to be a cryptocurrency. It's not intended to be a Bitcoin competitor. It's intended to be more of a smart contract layer platform, but very similarly architected like Bitcoin. Where Bitcoin is more about value exchange, this is more about smart contracts. But very exciting, and I tell most people buying Bitcoin today, if you're going to buy $1,000 worth of Bitcoin, you should also buy $50 worth of Ether. I say that's how I'm hedged today from an allocation perspective. But that's, I think, a very exciting one. And I would tell most people in general, don't buy alternative cryptocurrencies. Most of them are a scam unless you really know what you're doing. And make sure you do your research.
Yeah, they seems to be like people pop them up with this concept that, if you...
Like penny stocks, pump and dump.
Pump and dump. Like, oh my God, this is going to be the next big one, and here's the difference. So the difference with Ethereum is
it's truly novel. It's a Turing-complete, virtual machine.
What does it mean, Turing-complete?
It's a virtual machine. It's got its own scripting language in the currency itself, which makes it very good for smart contracts.
Got it. And
it was built from the ground up. Like if you take a look at Bitcoin versus Litecoin, Litecoin was a fork. So Charlie Lee, the inventor who works at Coinbase, where we're an investor, and Charlie's an LP and an advisor to the fund. Charlie built that in, I think, 4 hours. So the market cap is about 150 million, maybe 130 today.
Yep, 130.
And that was four developer hours.
Wow.
I mean, that's not bad when you're up to about $30 million per hour of development engineering time.
And they own all the coins, or?
Well, they turned it on and they were mined very similar to Bitcoin. At day one, you had a Genesis block, and anyone that participated, was able to mine. As the founder, he mined quite a few, but he sold, like a lot of people did, early in the process. But I mean, that was very simple because it's just taking the open source code, forking it, making a minor modification. Ethereum was something that was truly novel and designed from the ground up, and probably the most interesting development outside of Bitcoin in the space today.
Why do we need to have mining at all? Like, the mining is such a tremendous waste of energy and time and money and bad for the environment. It feels to me like that was a mistake. Is that a mistake?
No, well, I mean, it depends on what you want to get. It's the trade-off that you want. What Bitcoin offers and what mining solved for is it's built a trustless system. It's where I no longer have to trust my counterparty. I don't need to know you to do business with you and to be comfortable. And I don't need to know anyone else. Historically, I mean, if you think about the history of finance and where banks and intermediaries came from, it's because I didn't know you, you didn't know me, we didn't trust each other, but we trusted, Goldman Sachs or Bank of America, and we trusted them to maintain the ledger and to settle transactions on our behalf. You couldn't do that until you built a technology that eliminated the need for trust. And that's what the proof of work system, has done, or solving of the Byzantine generals problem, which is what the mining is for. So Hal Finney at Caltech is the one that solved kind of this last, because it's a peer-to-peer network. What are the stacks of technology that came together? And that is, how do I prevent a double spend? So TCP/IP, or the internet we use today as a protocol, does not allow for me to send you a unique piece of code, a unique piece of data, in a way where I didn't keep a copy for myself or send it to 5 other people, hence the problem with piracy. And so if I was going to send you money over email, as an image or a set of characters and numbers, you're not going to be confident that I didn't keep it or spend it somewhere else. And the concept is referred to as a double spend. And so what was solved here by having this mining is a network of, sort of computers that have all tried to solve like a Sudoku type puzzle, this cryptographical puzzle. and then get an award. And by doing that, I've demonstrated I'm a legitimate node on the network, and then all the other nodes have to solve for it. And that is what has eliminated the need for trust.
Got it.
So there's no way to get rid of that today. There's some tests that have been implemented around what's called proof of stake and a handful of other proofs. But proof of work, which is what mining is for, is the only tested and proven, now for years with, billions of dollars of transactions funneled through it type of system to build a trustless network. It's not to say there won't be other methods later. And that's what Stellar, for example, is trying to solve, is a different consensus algorithm.
What is the possibility of this technology being used for something like, let's say, voting in a presidential election, or content being published to the web and being certified as like, this is the content? So I've heard pitches on, gosh, we're all going to vote, and every vote will be on the blockchain, so we won't have the hanging chads of the Gore-Bush election, or, oh my God, somebody tweets something and then they delete it. We'll just have everything be part of the permanent record. It would be, coded into a blockchain. Because when you post something to a blockchain, can you embed in the blockchain the actual content, or you just have that content was...
it can be in it. So back to like stampery, and using that example. I think that this is a perfect technology for elections and voting, and it will ultimately bring about the end of voter fraud. You can't create a fake Bitcoin. I mean, that's the advantage of this. You can't double spend a Bitcoin, and it's a transparent architecture, which means anyone can audit the information. So when it becomes publicly audible, you can't counterfeit, and you can't when you solve for these things, you end most of the problems that exist in elections. So there's two steps to this. One is we could build hardware that would get delivered to elections. It probably wouldn't obviously start in a presidential election. It will start somewhere small.
Yeah.
Or potentially even board elections where shareholders are electing, board members. So there's other types of elections where you don't have to deal with government so much, and there might be interest in such a thing. But one
it
is
could be memberships of the Academy Awards.
Exactly. There's a bunch of we vote on all sorts of things.
And we would know exactly which white members voted for which white actors.
Perfect timing for that.
Perfect. They could.
Though you may still want privacy because there's some reasons that is important for people in an election.
Right. You could say this is a member, right? Especially when they're doing racist.
Well,
stuff
like with Bitcoin, it's more of a numbered account. I don't know who you are, but I can see your wallet.
So if you did it with the Oscars, I mean, I'm making fun of them because of the issue, but you could
legitimately.
Maybe legitimate. We'll see. Yeah. I'll give. I mean, I guess like at a certain point, it's a trend after how many, right? Like I guess there's a statistical.
Yeah, I haven't gone and taken a look back over the historical, sort of.
Well,
Oscars.
Historically, we know that it was racist, but the question is, in recent years, is it racist? And I guess the way to do that would be
look at the last 5 or 10 years and
look at the last 5 years and say, what is the statistics of white actors versus black versus Hispanic versus Asian in leading roles? And then how does that correlate with their Metacritic score and their Rotten Tomatoes score?
Has someone not done that yet?
Nobody's done this. This would be a brilliant.
There you go. You just laid out most of the architecture to do this.
Yeah, exactly. This is a message to one of my super fans. Go ahead and go to Metacritic, take each movie an actor's in, put their Metacritic score against it, and put their Rotten Tomatoes score of the critics and of the consumers, right? Because I think I know Metacritic does consumer and consumer ratings and the ratings of professionals, critics. And then put that against the actors in every major film that was, released in the United States or whatever. And then you would see statistically if it is actually a racist vote.
And you can get there, you'll get down to a pretty accurate, a number that will be statistically relevant.
You would at least know if somebody got left off who is not white, right?
Yeah, so to finalize that question then, there's technology we could build and put in the market today, but if you wanted to do it over the internet, which I believe is the holy grail, the challenge is ultimately is in identity. I have to be able to know that you are you online. And so we've been investing, and there's a number of companies. We just made an investment, but there's a handful of companies that are trying to solve for identity on the blockchain. Once I can prove identity, then and this is not just a blockchain issue. Once you can solve identity on the internet, there are probably 100 amazing businesses that are going to emerge as a result of that having been solved.
And we've tried to solve that. Facebook believes they have people's identity. They have a pretty good shot at it. Why hasn't, they do have Facebook Connect. is there like a super Facebook Connect that would say like?
Well, Facebook could actually start saying it through their APIs, okay, we've verified that this person is who they say they are, this person is not. And Facebook's in a pretty good position. They could do that, but they haven't opened that up as a service.
Right. So,
and I believe they have enough data to probably do it.
Google could do it too, I guess. They have enforced real names.
Well, they have less data because they
don't have a graph.
Yeah, they have a lot. Well, I mean, they've got a lot of data too.
They have a lot.
They
of
could
data.
probably
They
pull. They could pull something off.
Yeah, it does seem like this would be an amazing service if everybody who wanted to be verified could pay $1 or $10 to have their home address verified, like Nextdoor and other people do by sending a postcard, their credit card. But then you would have to know that the person, the thumbprint on the phone would be.
Well, yeah, you got a bunch of biometric data, but ultimately it's the private key. Similar to a, but again, even most people don't think about private keys. This is public-private key cryptography. The best examples are like email. You have a public address, which is where people email you. Anyone can send you a message. It may not get through. You may have spam filters, but that's your public address, and you have a password that allows you to send from it.
And you have your
Bitcoin's public-private key is the same thing.
And your phone number where you can
two-factor auth get a billing, account or something that's probably attached to it.
That would be really cool if there was like a triple verified, this is you.
And well, we need that. There are so many things that we could do online today as long as identity is proven that we currently still have to do offline. Voting, I think, is one very good example of that. But there's lots of sort of bills and things that you still have to kind of prove out who you are. Mostly government-related stuff.
Yeah, it's interesting. But it's a chicken and egg because in order for somebody...
Driver's license.
Yeah. In order to do that, you would have to have some amount of scale. And who pays for it? Right?
Notaries. But again, there are still times where you have to show an ID. I prefer not to have to give that level of information to people.
Got it.
I'd rather be able to say, hey, this is verified, and here's the minimal amount of information that you need to verify whatever it is that you're supposed to be doing.
Okay, so you're also in Abra, which won the Launch Festival last year, and I'm an investor in as well. Tell everybody about Abra and how they're doing and why you invested in that.
Again, an example of a phenomenal entrepreneur that has fintech experience. And this is one of the things that gives me a great deal of confidence that I'm in. My biggest risk factor in my business is that I've got the wrong timing. The thing that gives me confidence that my timing is right is the quality of entrepreneurs that are coming into the space and voting with their feet. Yeah. And Bill Barheit would be a perfect example of that. And what I loved about his pitch at launch is that he didn't mention the word Bitcoin once in his presentation, which is what I tell a lot of entrepreneurs, because people used to come in with pitches and say, here's my Bitcoin company. It's called, what problem are you solving? I don't, just because you're a Bitcoin company doesn't mean I want to invest in you.
So explain to everybody what they do at Abra.
So Abra is focused on the consumer money remittance business, very similar to Western Union or MoneyGram. So you have about $550 billion a year being sent from places like the United States to Mexico, India, Philippines, et cetera.
Some immigrant who came here is working really hard,
sending money back home to family.
$10 every week.
And the interesting thing about that transaction is there's really no counterparty risk. Son sending money back home to mom. So there's
it's not an eBay seller who's selling some fraudulent like Michael Jordan autographs.
These are pretty easy to underwrite. Especially when you know who the recipient is on the other end. Yeah. And so. People are often paying 10 or 20% fees, going into these markets, and it's
10 to 20%.
But that's also because, the Western Unions of the world have bricks and mortar retail stores. I mean, that is an expensive thing to operate. Obviously, there's a lot of compliance costs, and their business was architected for a different era.
Right.
And so what Bill and that business is focused on is how do I help people get money from here to there, better, faster, cheaper. And Bitcoin is not any part of their pitch. It's Bitcoin is in the plumbing of the product. And this is what I've been saying for, probably about 2 years now, is that I think most of Bitcoin's growth in the near term is going to be from products and services where you don't even realize you're using it. And that's not part of their pitch. Actually, people are probably less likely to use Abra if they knew that Bitcoin was part of it, because most people don't know what Bitcoin is.
Right.
What they say is, I'm going to help you get money from here to there, better, faster, cheaper. And the way they do that is with an Uber type product. Right. So instead of me signing up for Uber to, basically pick up people and drop them off and be paid for that. This is someone saying, I'm going to deliver cash to someone on your behalf.
Right.
And so essentially they're taking the people that have historically in the emerging markets been selling prepaid cell phones or lottery tickets or, doing FX, on the streets. They're turning those people into the power sort of users, which would be the drivers, that are going to be delivering, money
So
around.
I want to send mom $100. I go to Abra, I put it in, and then I say, send it to mom. She lives on this street corner.
And she'll probably get it that day and for a fraction of the price.
And somebody shows up, knocks on the door, and just hands her $100 or minus 1%. And whatever, actually, I think these what they call tellers, who are really basically the Uber drivers with the money.
Correct.
The tellers get to pick, I think, their fee. So
yeah, I think it's a competitive marketplace.
Right.
I mean, they're still early, so these things are all being tested.
Worked out. Yeah,
but
so
I think obviously it's a huge market.
Yeah.
It's one where the demand is there, and that $550 billion a year that's being sent, I imagine would more than double if there was less friction and the pricing was better. I mean, when it takes days to send money back home and it's very expensive, you're going to probably do less of it than you would if it were efficient.
You might wait every 6 months and bring it down with you at Christmas or the holidays or whatever, instead of actually transferring it. So there actually could unlock additional value.
Yeah, so I mean, we're very excited about that opportunity. Again, great team, big idea, and great syndicate of co-investors. American Express is in the deal. Jim Robinson at RRE, who I think is
He ran Coca-Cola, or his dad did.
Amex. Yeah.
Amex. Or the Coca-Cola or Amex? I thought
American Express. Yeah.
American Express. What's STEM?
STEM is, you may know Milana from LA. She was running digital over at UTA.
Okay.
But they're focused on content creators.
Got it.
And so the idea is if I'm an artist or I'm making YouTube videos, if we were making something, let's say we were making you were making some
This
YouTube
week in
video.
startups.
And we decided we were going to split the revenue on this episode 50-50.
Got it.
STEM would become the platform by which it gets distributed through YouTube or whatever channels. And the revenues are going to be collected by STEM and then distributed to us quickly and transparently. Because historically, if I'm an artist getting paid, it might be net 1 year payment terms.
Wow.
Normally for the work that I'm doing today, I probably get paid a year or more later.
Residuals and whatnot.
Yeah, but however that money is coming to me for whatever it's for. And it's going to be very opaque as to how that money ultimately got to me. So anytime that you're bringing transparency to a market, I think you're doing something good. And I think artists and content creators have, kind of been getting the shaft for.
Well, you would know.
We
You
don't
were
even
a
really.
child actor.
Yeah. Yes.
Well,
actually,
I never saw you in anything. Were you in anything I would have seen? When were you a
perhaps.
child actor? The 80s, 90s?
Well, I started when I was 3, so the early 80s.
Okay.
And then I acted up until I was 16. And the movie I was probably best known for was I played the son of the president. It was a movie called First Kid. Sinbad was my Secret Service agent. And then
Cool.
I starred in that movie, so that's why I'm better known for that. But the first movie I did was The Mighty Ducks. I played young Emilio Estevez, all the flashback stuff.
I didn't know that. I've never seen that
I'm from
movie.
Minnesota.
Got it.
And I was the only kid with.
Why did you quit acting? Just boring?
I was a very entrepreneurial kid, so I was building lemonade stand business after lemonade stand business from the age of like 7.
Yeah.
And in having grown up in the entertainment industry, I didn't want to be, the performer that's showing up to perform, because I also didn't think I was a great actor. So I thought of myself as a juggler or whatever. I was a performer. I was there to entertain. And I wanted to produce, and I wanted to be the person putting the project together. I wanted to be the founder is the right way to think of that. And so that's how I ended up getting into entrepreneurialism, which started with Den.
Yeah.
And then that ultimately all failed. And then I'd also played games my whole childhood. And I said, I think that these digital assets inside of games, people want to buy and sell these things, but there's no game company in the world that sells them. So I said, well,
maybe I'll do that.
Let me go build that business, which, I did.
And that did pretty well.
Yeah, that one, I had 400,000 people in China playing video games professionally to mine digital currency for
400,000?
Yeah, like in 2002, 3, 4. Built up a
And they were
pretty big
basically selling Diablo, suits of armor.
They were playing World of Warcraft to mine digital currency, which then I would sell into West. I mean, I still do $1 billion a year in that business today.
Wow.
I'm still in it outside of all this stuff.
Yeah. And so what worries you about cryptocurrency and the space? Are there things that keep you up at night when you think about the future of this and where it's going? Or does it feel like we've reached a sort of point of stability? Because even with somebody like, leaving with their ball and saying, this sucks, like the price didn't change all that much, did it? The price of Bitcoin, has it gotten...
Actually, it didn't. It went down for a couple of days, and that was it. So the market yawned and basically didn't think that much of it.
Yeah.
I'm surprised I expected more of a reaction than we've seen. But the things that keep me up at night are, market timing more than anything. If this takes 10 years to become a big deal,
right.
as you know, as an early stage investor, we're going to get recapped out. I won't be able to stay liquid long enough to support these businesses through a bear market if it takes 10 years.
Right.
And that would be the other thing: global macro trends, the things outside of my control. If we are in fact in a bubble, and if that bubble is coming to an end, and we've had a pretty rough start to the year. These things affect companies' ability to raise subsequent rounds. And if companies start running out of money and my pockets aren't deep enough, I want to make sure that I've got, enough food, essentially in storage to survive
winter.
And
winter has come. Yeah. It's not coming, it's here.
It's feeling pretty cold.
I mean, the public markets have obviously come
rough.
down 20%. And then we stopped having these late stage party crazy, whatever, high valuations in last summer. So, but it feels, I don't know, it feels kind of stable to me.
Yeah,
Maybe I'm crazy, but it feels to me like everybody went a little crazy and everybody's like, you know what? Let's end the party. It's 2 a.m. This has been a great party, but let's all go home. And now everybody's like, let's just make sure this year we clean everything up. If there's anything that anybody got a little control, let's talk about it. Let's work it out.
Well, and in tech, this is very different than 1999, 2000.
Yeah.
We may say things are overvalued. Maybe they are, maybe they aren't. But most of us will agree, most of these businesses are businesses.
Well, they have revenue.
Yeah, they have revenues. If nothing else, okay, maybe some of those revenues are, not sustainable.
Subsidized.
Subsidized through venture capital.
Yeah.
But, the one thing that's certain is these are all real-ish businesses at a minimum.
At a minimum.
And, I think the market's a little bit different today. So I'm not smart enough to say what's going to happen here. But these are the things that concern me. If the capital markets just go to hell in a handbag, naturally everybody starts going to cash. And I have to figure out how to keep a portfolio of companies alive that are not necessarily generating the revenues necessary to sustain themselves. So those would be concerns. A little bit of FOMO always.
Yeah.
Fortunately, we pretty much get into almost every deal we want. But we have 3 full-time partners and a few others that work in the firm, part-time or near full-time. So we see most everything. At least we try to, and we'll hustle if we have to get into the things that we want. But there's a little bit of that, and other than that it's a fun game. I mean, I feel we live a blessed life.
For sure.
We get to get up and do things where we're going to in some way hopefully change the world. And from my industry's perspective, the idea of impact. There's 5 billion people on the planet that don't have basic financial services. The ability to give them that in the same way that the internet has given people access to information, which has really liberated the world in many ways.
Yeah.
To be a participant in that type of event, kind
of,
and you can make some money and have fun along the way. I mean, life is good. I have nothing I can complain about.
All right. On that note, let's all thank Brock Pierce for coming on the program. You can follow Brock Pierce. You can follow Blockchain Cap, CAP, and blockchain.capital. Thanks to our partners, and check out his portfolio companies, Abra, Stampery, got so many good ones. And you can see all those at blockchain.capital. Bitcoin's here to stay. I believe Bitcoin's not going anywhere.
I agree.
I think it's too much been invested now for it to fall apart. And
if it goes somewhere, it's long time from now. We're talking 5 or 10 years.
Yeah.
And it's only if something replaces it. But I do believe there's a role in the world for a non-sovereign asset for the medium of exchange.
Yeah, I think Bitcoin 2.0 is a likely scenario, or 3.0, where somebody comes up with okay, we cleaned it up. And then like you're saying, it could just follow that path. But the people who own all these Bitcoins are not just going to be rush for the doors to go into some other currency. They're going to be okay, we have some Bitcoin, we have some of this. Why wouldn't there be 10 different currencies that all have a certain amount of money in them, and then have a certain
Well, I think we end up with
technology stack.
We end up with thousands of them, tens of thousands, because I believe eventually every brand will have one. In the same way we have frequent flyer points today, but let's instead make them more mobile.
That's bizarre. So you'll say there'll be Google dollars,
Amex
Apple
points,
dollars.
American Airlines points, and we have a lot of those things today. Amazon credits. It's just a matter of taking them from a closed loop system into an open loop. And the question is, when do big brands, choose to do that with their affinity points or frequent, their loyalty points?
That would be very fast. Is there a company working on that yet?
Or their gift cards. Well, First Data bought a company called Gift, and Gift has already announced.
Yeah, I know Gift. That's Vinny.
They're going to add they're going to start to create gift cards on the blockchain, which essentially has done that at least for the gift card ecosystem,
right?
Which I think is very interesting.
Yeah.
So I think we're going to see all of these corporate issued currencies start to take on. We'll be giving them wings.
Absolutely. All right, listen, this has been super helpful for me because, frankly, I can't keep up with this. It's like such a, like Bitcoin is like its own culture. Like this is cryptocurrency. It's like its own little bizarre.
This is all I do, and I can't keep up with most of it.
Yeah,
I try to just following what's going on in Reddit and Slack and GitHub. That's more than a full-time job.
Just trying to understand. I mean, that's one of the interesting things about the pace of change in the world today. It's like there's everything going on in VR, autonomous vehicles, drones, cryptocurrency. Like you can't keep up with one of these, and they're all going at such a fast pace. When we came into the business 20 years ago, it was like, yeah, this internet is like, everybody's getting a faster connection. We went from like 56K, now everybody's got, DSL lines, now everybody's got cable modems. It's getting fast. I have a T1. Like, all you had to know was like, it's getting faster.
Yeah,
now
it's to the point of, I don't know how, I don't know what to think for the next, batches of entrepreneurs coming up. Because when things go beyond your ability to kind of even just wrap your arms around the information and what's happening in an industry, it just feels like to a degree you're, kind of blindly, going down a path because you can't track the data fast enough. But the exciting thing is that collective intelligence, I teach a lot at the Singularity University, and just the exponential growth of collective intelligence around things like medicine and science, where instead of me operating in a silo and trying to solve for some problem in the world, all that data is being replicated and shared with everyone around the world. So any sort of progress or any movement or momentum gained here, all of a sudden is shared everywhere, and then we start to act as a collective sort of
I mean,
mind.
Whatever happened in this device, like this device is powering Tesla now.
Yeah.
The GPS in here and the battery in here is the self-driving car.
Yes.
Like this is the self-driving car, like electric car.
Yeah.
All the batteries and the GPS.
Yeah.
And that this is based upon the computer, desktop computers, and GPS is based upon us shooting missiles all over the world and the government. So now it's all building on each other. Like the next person up the hill, it's like, yeah, I just bring this with me and I get all of, like the package you get with this is insane.
Yeah, I watched a cool Ray Kurzweil video last night, as that starts to get put inside of our
brains. Yeah, wetware is like, that's when it's going to be. I think that'll be the shift when you and I are like the old guys. Like
I'm already feeling pretty old.
I'm feeling pretty old at 45 now. But essentially, if you think about artificial intelligence and wetware, when the interface between the computer and our brains is hardwired in some way, which is we talked about in science fiction, Johnny Mnemonic, all these things. But that, which some refer to as a singularity, that will be upon us at some point. At some point, our brains are going to be able to just communicate to the internet without us typing on a keyboard or using some other interface.
I like those Matrix visuals of I want to fly a helicopter, and I got it.
Well, it's pretty much going to happen that you're going to be able to download knowledge into your brain, right?
I love it.
And you're going to have an exoskeleton. Like I was looking at exoskeleton. You jump down the rabbit hole. Sometimes I jumped down the rabbit hole of exoskeletons this morning. All of a sudden I looked up, 90 minutes was gone. So I'd really like to have an exoskeleton. I personally want to own an exoskeleton because I was hiking and I was like, I wonder if I could own an exoskeleton and what impact that would have on my muscles. Like if I owned an exoskeleton and I went for a 20-mile hike instead of doing like a 7-mile hike, would my muscles get stronger or would I use it to aid me just getting up a couple, what would that be?
Use it for the ride home.
Whatever. What is the impact on using an exoskeleton
by the way,
to augment your life?
At CES, Branson and Bill Ty have this extreme tech challenge, and
that's the one where everybody's going to Necker.
Yeah, and they put on
what a boondoggle that is.
I hate you guys. These guys creating this new sport where they're in full exoskeleton mech warrior battles. What's the name of the company?
Oh, I know this one. We're going to have them at the...
Yeah, the U.S. versus Japan is the thing that got them
all
their
publicity. We're going to have them at the launch festival. It's a lot of money to run these things, I think. Megabots?
Yeah, Megabots.
Yeah, Megabots.
I thought it was pretty cool, though.
We're going to have them on the show at some point.
I'm not much of a sport guy, but I'd show up for a Megabot sort of match.
But this extreme challenge, Bill Ty, who is a VC, went out kiteboards and then talks about being a VC. I don't know. I gotta have Bill Ty on the program because I don't actually think he's made an investment in 5 years.
No,
he has.
He's invested in the Bitcoin space fairly heavily. Yeah.
Because anything I ever see is just him smiling with his shirt off, with Richard Branson, and then a bunch of people on a beach and kiteboards. I know he used to work really hard. I don't think Bill Ty is doing anything but kiteboarding.
He's in a few different Bitcoin deals.
Right.
One of which he's on the board of, which is Bitfury, and then there's another company, Breathometer, which I'm pretty sure that he's in.
Really? Well, anyway, I get the sense that I'm very jealous of Bill Ty. I'm going to put it out there. I know he's worth.
He's living a good life.
Guy's worth like $50 million, $100 million, and he's out there surfing, kite surfing, and then pretending to be a VC. Because I saw this boondoggle you guys are calling a competition. Listen, I'm doing Launch Festival. That's a lot of work. 15,000 people coming. I saw this extreme challenge, and I saw everybody's a judge. You all go to Vegas, you pick out a couple companies, and then it's an excuse for you all to go to Necker Island for a week. What a scam. I love it. I'm so jelly.
It was good fun.
But when are you going to Necker Island?
Well, I went last year. I guess they're all going, I think, next month in February. I've got my whole next few months are crazy.
Yeah. I went to Necker once, but I was a guest of somebody who was just, going down there. But this is what I'm going to do next year. Launch Festival, instead of 15,000 people, it's going to be 15 people.
Well, we can try and arrange a Necker trip.
I'm going to call Richard Branson.
We'll figure it out.
And I'm going to get Richard Branson to give me the island, buy the island out, and then I'll get 15 sponsors. It'll be me and 14 sponsors. I'll invite.
Let me know how I can help.
Exactly.
I'm happy to be staff.
Yeah, happy to be there. I'm going to invite 10 startups to pitch when I'm on the beach, and then I'm going to call it the Launch Festival. That's it. That's the Launch Festival. You're all invited this year. 15,000 people come in launchfestival.com. None of you invited in 2017. 2017 Launch Festival was me, 14 sponsors will be the judges, and then 10 of you will come, and then I'll invest in 10 companies. That's it. It's less work.
I think that model will work somewhat.
I hate you, Bill Ty. This is a message from Bill Ty. The guy figured out how to do what I do better. I hate you, Bill Ty.
Actually, you do a pretty amazing thing in terms of, and I don't know how much credit you give for it. I mean, historically, most investor conferences had entrepreneurs paying, and you did an amazing job of reversing the model where entrepreneurs were being preyed upon by conference organizers. You've created an incredible platform that is engaging of entrepreneurs, bringing together investors, creating legitimate value for all participants in the ecosystem. And I don't know how often people say that, but I have to continue to commend you for it.
Thank you. That's very nice of you to say. I mean, when you and I came up, how infuriating was it when they're like, yeah, we'd love to have you pitch, and they're like, it's $4,000.
Yeah, and there's almost no real investors even there.
And it's, by the way, it's all lawyers, accountants, and headhunters.
Yeah, it's a bunch of service providers.
Bunch of service providers pretending, this Keiretsu form and other bullshit, and they were like, oh yeah, no, there's going to be some investors. Who's the investors? And they're like, oh, we can't give you the list for privacy.
But you helped change a lot of that, and for the entrepreneurs today that are new to this, no, the market 10 years ago was the people with no money were the ones being forced to shell out what little cash they had in the hopes of being able to get access to more, and that was the model for 15 years.
It was bullshit.
It was.
Bullshit.
I agree.
Now I've fucked it up. I love it. I love fucking shit up.
So don't sell yourself short, buddy.
No, I know. I'm just very jelly of like.
And I love Bill Ty.
I love Bill Ty, but it's just like when a guy takes the model and then he makes it so luxurious and easy. You know how hard it is to have 15,000 people come to Fort Meade? It's like $1.5 million to do this thing. I have to go out, beg people for money. There's no revenue except for the money I beg people to give us as sponsors.
How much begging is it this time?
It's a decent amount of begging. You'd be surprised.
Like literally, once you're in business, normally you've got a model. Sponsors start to want to
I would say there's probably like literally of the $1.5 million that it takes to do this, like there's half of it that comes in from the regulars, and then the other half I have to go beg for. But literally, like we're in, and everything happens. This is the other thing. Everything happens in the last like 45 days. So it's always down to the wire. It's always like pressure, right? Like we're 9 years into doing this, like we're 8-9 years into doing it. It's always pressure down to the wire. And then literally at the end, I literally have to go with the sales guys and gals, and I'm like, can you help us? So literally, we sent 100 emails to 100 founders who have companies that should be sponsoring and having tables from me, from my email account, saying like, here's what we're doing. We'd love your support. Like literally, I go and ask them, please support the thing. And you know what? They do, which is great.
You do a great thing for the community.
I love doing it. Actually, for me, the biggest rush is at the end of it, when the companies like Abra, whoever, say like, this changed my life. I literally have so many people now who went to it.
And you've gotten into some good deals. And in part, that's because you have these platforms.
I do get into somebody usually makes a little bit of room for me.
I heard you were an investor in Uber and a few other
Uber, a couple other little things here, Thumbtack.
Well, I guess you've been friends with Travis long before.
That happened. That was a 20-year. That was a 15-20 thing. But a lot of them, I think a lot of the young entrepreneurs have come to the festival, have come to watch This Week in Startups, and then that does create a virtuous cycle of. Now that I have an incubator, they're like, I watched the show. I'd love to hang out with you. Because you know how it is. And this is one of the things about celebrity, which is people assume they have a relationship with you because they saw you in the Mighty Ducks. So they come up and they actually think you're the guy from the Mighty Ducks. And they're like, oh my God, how's your hockey career? And you're like, I'm not actually a hockey player. But in this case, when it comes to reality TV, they know we're friends. They can see. And they actually get this, like what I call asymmetric intimacy, which is like they actually think we're friends. In people's mind, when they watch you on television, is why I think television is so brilliant. They actually think that they have actually formed a friendship with you. You're just not privy to it as the person on the other side of the camera, right? Like people came up to you as a child and they just start talking to you.
It was.
It's weird, right?
It was great as a teenager.
Yeah, girls come up to you, start talking to you. They assume they know you. They think you're great. It's awesome. You're starting on second base. You're like, oh my God, now we can go get a cup of coffee. I don't have to introduce myself. Well, that's exactly what happens, I think, in this situation, which is I don't have to introduce myself. Of all the things that gets easier for me is I don't have to introduce myself when I'm talking to somebody about an investment. And I still introduce myself to people and they're like, did you really just introduce yourself? I'm like, yeah, I'm Jason. And like, I know who you are. That's a good feeling. Because then it does start the discussion, later on. But
on second base, as you put it,
you're basically halfway to being able to invest if they know who you are. Like you're trusted in some way, right? Which gets back to cryptocurrency, being trusted. All right, listen. Thanks, Emmy award-winning producer Jackie and Jake. Good job. No errors today. I like to see no errors, Jake. I'm watching you. All right, we'll see you all next time. Bye-bye.